Hello investors, my name is Tomasz Wiśniewski. I'm a chief analyst in Alpari Research and Analysis, and this is daily analytical report with Alpari. Quite a lot happened overnight and today's morning, so we have a lot to talk about from the fundamental point of view. But first, let me show you the calendar. I will explain what happened yesterday because it will be important for us. For example, we had data from the Department of Energy from United States about EIA crude oil stocks change. And as you can see, we had a huge drop here in inventories, which was a positive information, which was bullish for oil, and it helped oil to gain strength. Overnight, after that, we had an interest rate decision from Reserve Bank of New Zealand. It was kept on the same level as expected, but the statement was rather dovish, which was unexpected. That is why New Zealand dollar dropped to yearly lows. And for example, yesterday we had a buy signal on New Zealand dollar to Swiss franc, but it was denied today, and we always warn our traders not to trade if you are respectful to your money management rules, risk control, etc. To your if you have a respect to your money, you try to avoid trading in a day when you have an interest rate decision, or even day before. Well, it depends from your time frame, right? I'm telling you that from the point of view as a swing trader and a long-term position investor. I'm trying to keep my positions open for a few days, so I'm avoiding trading in the same day as you have an interest rate decision. Also today, what we had was a pack of data from Great Britain and an interest rate decision as well. So the rate remained unchanged, 0.25 bank rate with vote 7-1. And we got we have some highlights from minutes from monetary policy summary. Well, Bank of England assumes a smooth Brexit, so they are not feeling like there's gonna be a hard Brexit, which traders tried to discount in the previous months. Also, they published quarterly inflation report where they cut the GDP forecast to 1.9 from 2% in 2017 and 1.7, and the expectations, the forecast of the GDP in 2018 went higher from 1.7 to 1.8. Also, Bank of England sees higher CPI. They see that as 2.8 instead of 2.7 in fourth quarter. And also they see inflation at 2.2 in 2 years and 2.3% in 3 years. That's actually good news, right? Even it's especially about the Brexit, but British pound now is edging lower. Buy the rumors, sell the facts, right? GBP was very high before that. I think it's not a reversal; it's just a normal correction of the recent movements. But I will show you that in a second. Also, we had some speeches from European Commission. They said that growth in the euro area will be slightly stronger this year than previously forecast, which is good news. Okay, adding that some risks to the outlook have eased following the defeat of populist parties in France and the Netherlands. So they said that it helps the European economy. President Trump fired FBI Director James Comey. We all know that. That was the story. Yesterday. What's more, this dovish comment from dovish comments from New Zealand Reserve Bank of New Zealand. We also had this data from the oil market that I was telling you about, and this is the situation today. What else should we focus on today is that in 24 minutes we'll have PPI and initial jobless claims from United States. As usual, data from the housing market from Canada, and that would be it for today. As for tomorrow, GDP from Germany, the largest economy in Eurozone, and also pack of data from United States with retail sales and CPI being the most important. Right, let's take a look on the charts right now, because that's where the magic happens. Okay, we can start with cable. Why not? Because yesterday we showed you this possibility of a deeper correction, right? And it's actually happening right now. Maybe we can still have the Fed of this kind. It's better to be safe than sorry, so we can place it here. But personally, I would love to see the price retracing here and bouncing from this midterm uptrend line and from this horizontal support here on 1.2760. That would be a really nice technical trade. The price would make the same correction as this one, touch the uptrend line and a horizontal support. We would see a nice reversal pattern, like inverse head and shoulder formation or an engulfing. That would be a really welcome trade, and most probably I would enter this without a hesitation. So for now, the sentiment here is in the short term is negative, in the midterm and in the long term is positive. Euro dollar, as expected, we were telling about that for the last 2-3 days, that we are expecting a correction here, a deeper correction, and that the price will finally test this horizontal support. Maybe it's gonna happen today. As you can see, after our daily analytical report yesterday, the price declined. They are declining today, and I see an opportunity for 20 pips more here. And in the longer term, that would be nice to close this gap. It's still not closed. 100 pips from here. I think that this support. Well, again, I'm a price action trader, so I don't try to expect or anticipate anything. I try to trade what the price is trying to tell me. So I have to wait for the reaction here. That's the difference between economists and traders. I don't try to forecast what's gonna happen. I try to earn money on it. And hopefully you're trying that as well, because there's no fun in forecasting, there's fun in making money. So far, I don't know what's gonna happen. I have to wait for the price action here, for the reaction of the price here. I want to see what the price is trying to tell me, and then I will be able to trade it. So far, for me, euro dollar is no-go zone. I'm not entering this because, according to my system, I do not have enough signals here that would drive me to one final conclusion. Like for example on cable, where I don't have those signals as well, but at least I have a place where I will be waiting for them. Also, British pound to Canadian dollar is having a correction. This downswing is supported by two main factors. So first, we do have a weaker pound, right? But also we do have a stronger Canadian dollar, which is supported by higher prices of oil. So what we finally broke this line, but I don't think that's a relevant information in this setup. What I would see here is a flag. I'm waiting for a correction equality pattern, which will also allow the price to test this horizontal support created by that resistance. I'm not telling you that it's gonna happen inside of the flag. Maybe the sellers will push a little bit harder and the price will decline here. And as with the cable, so British pound to American dollar, I'm gonna be patiently waiting what's gonna happen here. If I will see a bullish reversal pattern here on this important horizontal support in an uptrend, for me that will be an invitation for buying, and I will look more closely into it, with a possibility obviously of opening a position here, as that's what we are talking about. The New Zealand dollar to American dollar, a nice drop after this dovish statement. Everything is going according to the technical situation. It wasn't here because I was telling you that after the bearish breakout of those supports, the price should decline. It's actually happening right now, but wasn't happening here. After the breakout, the price was locked in a sideways trend, which wasn't very good for the technical situation, but now we do have a drop. They try to correct this movement a little bit. For me, it was a nice technical situation here. It resulted in a downswing, alright, fair enough. But I don't like the style of this trading, so this pair loses importance for me. It's not tradable for me according to my system, so another instrument that is a no-go zone for me. I don't like the style of the trading here. To open a position, sometimes you just need to feel it, sometimes you do not feel it, so there's no point entering. On Euro to Japanese yen, what we are having here is a breakout of few trend lines here and here. Now we still have a horizontal support. The sentiment is definitely bullish, and it will be nice to test this red line as the closest support. Why not? Maybe red is not the best color for supports, so let me change that to green color. Much better. So yes, what we are waiting here is a contact with this level, possibly a bullish reversal pattern, and entering a long position. But still, even with the price touching this level, that will be a very flat correction, and actually the price can go much deeper without triggering a long-term, mid-term sell signal, right? The price can go even here or here, and it wouldn't change the buy sentiment. American dollar to Polish zloty, yes, 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 this is a good one. Again, look at that, the same bearish downswings in a row, 4,400 pips, for 4,500 pips, 4,600 pips. On a daily chart, it looks juicy. bullish engulfing on a horizontal support created also by those lows from November, right? We do have a continuation, so a candle with higher highs and higher lows, which makes this reversal legitimate, and now the price is going higher. We do have this position opened on our live trading account. It's still not protected with the break-even point. We still do have a stop loss below the level of the entry, but it's going right, so probably we're gonna move our stop loss on break-even point soon. I will talk about this position tomorrow on our live trading session, which we will have after the daily analytical reports. For now, I have only this position open. In the morning, I had also long position on American dollar to Swiss franc, but I closed that today with a nice profit. Almost 2% on that. Euro to Australian dollar. We do have a continuation of this correction. So the price should get in this area. In this area, we should, if I will see a reversal pattern, inverse head and shoulder formation, or an engulfing, or a pin bar, I would love to enter here with the long position. So here I'm waiting patiently for what's gonna happen. Euro to New Zealand dollar. What is happening here is we had this sell signal after the breakout of this horizontal support. I thought that it's gonna go here to test this this neckline, but then Reserve Bank of New Zealand came with their dovish statement, and the price went significantly higher. So again, it's according with this signal created by a breakout of the neckline here. So it's good for the technical analysis, but with this sharp movement, the price lost importance for me as well. This pair is for me is no longer trading technically, so I'm just waiting for the situation to be more technical, and maybe I will come back to this instrument. Like New Zealand dollar to Swiss franc, as you can see, we had a positive movement yesterday, a breakout of the upper line of the flag, but the Reserve Bank of New Zealand came, and well, I don't want to say that they destroyed everything, but definitely they denied the positive sentiment here, the positive scenario that was before Reserve Bank of New Zealand. So there was a breakout of the upper line of the flag, and in theory the price should continue to go up, but now it's back in the flag again, and I marked with a yellow color false breakout, right? That makes a false breakout out of this. But again, I wouldn't be so sure with opening short positions here against the false breakout. I know, according to the price action, going for the false breakout is very welcomed, right? But not, in my opinion, not this one created by interest rate decisions, right? I like false breakouts which are triggered by the technical situation, not by the fundamental switch, right? So if that was denied without any fundamental help, I would enter with a short position here, but that wasn't, so I'm not doing that. American dollar to Canadian dollar locked in a sideways trend. As you can see, we had a bit of correction here. Canadian dollar was a bit stronger due to the higher prices of oil, but it's gone now. Sideways trend is present here. As long as we stay here, the sentiment is positive, and actually the sentiment is positive as long as we stay above this horizontal support labeled with the green color. Also, if I would be able to choose, I would love to see the price touching the green support here and probably declining like a flag, right? Something like that. Okay, price declining here, touching this horizontal support and bouncing of the support and heading higher, right? But it's happening, maybe not very often, but once it's happening, it's a great trading opportunity. American dollar to Japanese yen. What we are having here is finally a correction. We talked about that instrument on our trading sniper video. So that's a downswing. Last 12 days, we do have only 2 bearish days. 1, 2, 3, 4. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. We do have this and this days are bearish. And it's time for the third one in 13 days. And that can be an invitation for a correction, especially that we're exactly in the middle between a horizontal resistance on 115.4 and a horizontal support on 111.80. Right, but a short-term situation is kind of a bullish because it's an ascending triangle formation. But ascending triangles, well, yes, they do work, but they get easily denied as well. Right, so we can get this ascending triangle, but in the same time we can get a rectangle, for example. So we just have to wait for the situation to develop. But that's a good invitation to take some profits after such a strong upswing. And overall, this upswing had 600 pips, over 600 pips. So it would be nice to see a bit deeper correction for those traders who missed those strong movements. They can enter the market after a correction, because entering the market right now, in my opinion, is a bit too risky. After 600 pips upswing without a correction, still entering with a long position is a bit risky. Too risky, for example, for my system. American dollar to Swiss franc. What do we have here is also they try to make a correction, but the trend is strong here. It's also situation is very similar to this one on American dollar to Japanese yen. But what we're having here is inverse head and shoulder formation inside of a flag. So it's also supported by this inverse head and shoulder formation and a bounce of this horizontal support here on 0.9930. Right, so we were about to have a bearish day, first bearish day this week. But maybe it's not gonna happen because the buying pressure is high. In our opinion, the buy signal is still on, right? There was a chance for a correction. That's why we closed our position, but we closed it relatively high with a nice profit. So we won't regret that we closed that maybe too early or something, because we didn't. The buy signal stays on, right? For me, I wouldn't enter now. I would wait for a bearish correction, but that's just my approach for trading. Silver is trying to make a correction here. Look at that. They created a doji that indicated a stop here, a pause, and now they try to retest this uptrend line. They try to test it as the closest resistance. In theory, the price could go a bit higher to test this, but I don't think it's gonna happen because the demand here is very weak. There is no demand for precious metals whatsoever. There is no demand for gold, no demand for silver. I cannot imagine that in the current conditions they will be able to push the price higher. Although in the long term I'm a bull on gold. But in the same time I can read what the price is trying to show me, and currently the price is trying to show me that there is no chance for an upswing whatsoever, right? Unfortunately, but that's the situation. You have to go with the flow. You have to go with the situation marked by the price, not with your imagination or with your hope. That's the trading. Trading is making money on market movements, not sticking to your hopes or predictions or forecasts, right? Gold is also trying to to create a correction movement. They are trying with a bullish engulfing here. Gold in a slightly better situation than silver. It's behaving in a better way, but still it's bearish. Not much to add here. Australian dollar to American dollar, they also try their chance. Australian dollar to American dollar is highly correlated with gold, so we shouldn't be surprised that we are having a pause here, that the price is also trying to retrace. That's happening a bit too early. This situation I would welcome here, 40 pips lower on the trend line. So far I'm not interested in this kind of setup far from a trend line. Canadian dollar to Swiss franc, bounce from the lower line of the triangle seems legitimate, but I wouldn't enter long position as long as we stay below the trend line, and we are staying below the trend line here, right? As long as we stay below the trend line, it's no-go zone for me, at least long. Australian dollar to Swiss franc, here kind of a V-shaped retracement on the horizontal support, but still below the trend line, so no-go zone for me. Let me show you this oil heading higher after this data came better than expected. So they bounced from this horizontal support. They broke the horizontal resistance here, which will be the closest support, 47.5. Now we're entering neutral territory. Obviously the price is in a downtrend because it's started to make lower highs and lows. But the first closest resistance is here, so there is still a nice potential for continuation here, but in general I'm negative on oil. S&P 500, what we're having here is a boring sideways trend, which also can be seen on the DAX. We had this kind of a pennant. We finally, as you can see, just an hour ago, we managed to break this line, but it's nothing significant because this line was very steep, so it does not change the situation here. As you can see, they didn't break this line, they crawl out of it, so it does not trigger the sell signal whatsoever. It's hard to imagine where the sell signal can be triggered here. Maybe after a breakout of this horizontal support. It's interesting because usually when the oil is going up, the stocks are going up. You may ask how, if oil is near all-time lows and stocks are near all-time highs. Well, I'm explaining you that it's a typical explanation when not much is happening on the market, that some experts are telling like, oh, stocks are driven with the higher price of the oil, etc., which is again a typical explanation, not far from lying. So we just have to be careful with this kind of statements. What do we have here? I was telling you about the low VIX, which is the volatility index and fear index. and we're just having an easy sideways trend. Not much is happening on stocks. Stock traders are just waiting for a new impulse, for a new trigger, probably to buy even more. Right, thank you very much, guys. That's the situation on the market. Remember that trading and investment in financial markets involves an element of risk. Now we'll have a short break, and after that a webinar about trading psychology, very important one. If you want to be a successful trader, you have to attend this webinar. And also next tomorrow, remember, we do have a live trading session, so I will tell you about trading from the scratch, this practical approach to trade.